Palantir Technologies has experienced a remarkable surge, with its stock rising by 165% over the past year, driven by its expanding AI capabilities, increased commercial adoption, and major government contracts. Despite these positive developments, the stock's current valuation is becoming a concern. Palantir's valuation multiples have reached very high levels, which raises some red flags. Palantir's rally continues to be fueled by its success in both the government and commercial sectors. The company has solidified its presence through key partnerships and contracts, particularly in the government space. A notable recent win was its $480 million, 5-year contract with the U.S. Department of Defense for its AI-powered data fusion platform. This highlights Palantir's unique ability to provide real-time data analysis solutions, which are crucial for giving the U.S. and its allies a strategic advantage in today's unpredictable geopolitical climate. In the commercial sector, Palantir continues to gain significant momentum. A recent multi-million-dollar contract with Nebraska Medicine showcases how Palantir's artificial intelligence platform, AIP, is transforming industries like healthcare by streamlining operations, optimizing resources, and enhancing patient care efficiency. This underscores the potential of Palantir's technology to extend well beyond defense, a point that some critics of the company seem to overlook. Moreover, with a series of recent developments, Palantir's growth prospects appear even more promising. The company has secured a $99.8 million contract to expand the Maven Smart system across all branches of the U.S. military, reinforcing its position in defense technology. Additionally, strategic partnerships, such as the renewed 5-year agreement with BP focused on AI-driven operational improvements, are expected to significantly bolster its commercial presence. Given this context, the 23% growth in government revenue and 33% growth in commercial revenue reported in Q2 2024 could see further acceleration, especially as new clients are anticipated to sign substantial contracts. This explains the continued enthusiasm among investors. Palantir's recent profitability metrics are also quite impressive, significantly boosting investor confidence in the stock. In Q2, the company achieved a Rule of 40 score of 64%, which is exceptional and reflects a rare combination of strong growth and margin expansion. For those unfamiliar, the Rule of 40 measures the sum of a company's revenue growth rate and profit margin, with a score above 40 typically indicating a strong overall trajectory for tech companies. The company's ability to surpass this benchmark by such a significant margin highlights its excellent execution and suggests it is well positioned for long-term profitability. Analysts on Wall Street have been raising their revenue and EPS estimates in recent months, reinforcing this positive outlook. Revenue is projected to grow approximately 24%, 20%, and 20% for fiscal 2024, 2025, and 2026, while EPS is expected to increase by 42%, 21%, and 20% during the same periods. Palantir's customer base, especially in the commercial sector, is expanding at a faster rate than its revenue, indicating that many new contracts could be in the pipeline, which could further accelerate the company's growth. Another key factor driving Palantir's recent rally is its inclusion in the S&P 500, which took effect on September 23, 2024. This milestone has greatly contributed to the upward momentum of Palantir's stock, as being added to the S&P 500 typically leads to a surge in demand for a company's shares. Millions of 401k accounts and institutional portfolios that track or invest in S&P 500 index funds will now automatically purchase Palantir stock. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. The expected increase in buying volume is likely to create strong upward pressure on the stock in the short term, which explains why investors have been eagerly accumulating shares ahead of this trend. However, despite the exciting growth narrative, I am concerned about Palantir's valuation. The stock's rapid ascent has pushed its price to over 30 times this year's expected revenues, a very high multiple that suggests the market is anticipating near-perfect execution going forward. While I believe Palantir's strong AI deal pipeline is likely to outperform Wall Street's current revenue projections, it's challenging to imagine the stock continuing to rise from such a lofty valuation. From an earnings standpoint, Palantir's valuation also appears quite stretched. The stock is trading at over 100 times this year's expected EPS, and even when factoring in a growth rate that exceeds Wall Street's expectations, it seems to be priced as though it has already achieved profits that may not materialize for several years. This makes the current stock price difficult to justify, even for those who believe in the company's long-term potential. Consequently, some downside risk seems likely from this point. Wall Street shares this cautious sentiment towards Palantir, as indicated by its current hold consensus rating, which is based on 4 buy ratings, 5 hold ratings, and 6 sell ratings in the last 3 months. The average price target for Pltr is $27.08, suggesting a potential downside of nearly 28%. This consensus aligns with my concerns about the stock's valuation. The average price target for Palantir, Pltr, is set at $27.08, which implies a potential downside of nearly 28% from its recent trading levels. This target is significant, as it signals that analysts believe the stock could decline substantially, indicating their concerns about its current valuation and future growth prospects. Analysts may be factoring in various elements, such as macroeconomic conditions, competition, and the sustainability of Palantir's growth trajectory. Additionally, the mixed ratings reflect uncertainty about how well the company can maintain its momentum in a competitive landscape. For instance, while Palantir has secured lucrative contracts and expanded its presence in both government and commercial sectors, some analysts might be questioning whether these growth metrics can be sustained given the stock's high valuation multiples. Even though Palantir has demonstrated impressive growth, the market appears to be pricing in a level of success that may be difficult to achieve consistently in the coming years. Thus, this cautious outlook from analysts serves as a warning to investors to approach the stock with care, especially at current price levels. In conclusion, while Palantir boasts strong growth prospects in both the government and commercial sectors, fueled by its AI capabilities and strategic partnerships, I believe the current valuation carries substantial risks. Don't forget that God, the creator of heaven and earth, will bless you abundantly, make you the head and not the tail if you love him and obey his word. Acknowledge him in your plans and he will direct your paths. Proverbs 3 verses 5-6. If you have watched the whole video until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today, your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Thank you, see you in the next video by God's grace. We love you, and blessings to you.